traders and everybody basically. So I know you guys love to trade the orb, and I know you love to trade breakouts. So what I'm presenting to you right now is pretty similar, so you're going to love this one. It's called New York Fakeout instead. So it's going to be pretty similar to the breakout, but instead of looking at price, it's going to break out either from the upside or the downside of a break. We're going to just look for fake out and then to trade in the other direction basically, and we're going to use the 1 p.m. candle instead. So 1 p.m. 13:00 p.m. 15-minute candle. This is right after New York lunch right here. So we're going to focus on this candle, and we're expecting to see price is coming down like this, right? And then coming into the lunch right here. And then the first 15 minutes after the lunch is open, we're going to mark up the high and we're going to mark up the low, and we're expecting price to fake out, take out liquidity on the top side right here, come back into a supply zone, and then move to the downside basically. That's basically how the strategy works. So New York fake out, and I'll show you exactly what I mean. And also the fun thing about this is that we're going to trade Dow Jones and not the NQ in here, so you can easily do this on futures as well. So let's dive straight into the charts. So I'm just going to delete everything in here like this, and there we go. So basically the New York fake out 1 p.m. candle, if I scale out the 15-minute time frame in here, you can see that this is the 1 minute time frame right here. I'm using an indicator called ORB because you can, this is actually the ORB, but he has recreated the timely opening range breakout strategy by Sireman. That's basically the one I'm using right now. I find this really good. So 13, yeah, 1 p.m. candle right here. You mark up the high, you mark up the low, you're waiting for the fake out, and then you're expecting price to move to the other direction. Your targets would be the first level right here, the 50% in here, right? 50% of this level as well. And then this last level could be your third partial taking as well. And then if you want to hold it for longer, you can actually do that as well. So this is basically an order flow following concept, using the fake out and expecting price to come out and actually take out some kind of liquidity in the market. So if we go a little bit deeper in here on the lower time frame, so let me just do the replay mode in here like this. Here we go. And then we can look a little bit deeper in here. So this was right before the New York lunch in here, right? This 1 p.m. candle. So you can see here price started to move to the downside like right here, and then it started to leave some liquidity zones in here. And then you can use your point of control in here and find out where is most of the trading occurred. So basically this is showing you right here where most of the trading occurred, and you can predict that price is likely to come up and take out this liquidity zone right here before pushing price down again, right? So when this is happening right there, took out liquidity, took out the top of the 1 p.m. candle as well, and then moved to the downside right here. And the only thing you're basically looking for is an unmitigated supply zone on the top side. So unmitigated supply zone, I will show you exactly how this is, right? It's a bullish candle in a bearish sequence, but the most important part is that the bearish candle right here, let's make this bearish candle right here needs to close clean through this zone and not coming back into the candle. And you can mark this up, right, like supply and demand in here. like this, right? So it's really important that price doesn't come back into this, but leaves this zone alone, because then it means basically there's a lot of unfilled orders in here, and there's a lot of people that has buy orders in here, and they wish to get out of this those orders, and if they get out of the orders around here, the price will start to dump again, basically. So if, for example, the next candle in here closes bearish as well, let me show you again a green box. I'll just make this red as well, just to show you. And it actually wicks into this one. I would view this as mitigated right now, right? People actually were able to get out of their position before price dumped again. So it's really important that it's a clean break to the downside, or on a demand side, it's going to be a clean break to the upside and leave some unmitigated orders in here. So I'll show you in a second right here exactly what I mean. So you can see this one right here was actually mitigated with the same candle in here, which I don't like. So I want to find something which is totally unmitigated. You can see that price broke a little bit through and stopped back in here, so I view this as a mitigated supply zone in here. And if price have broken cleanly through here and didn't come back into it or anything, I would use this zone as my confluence to take the trade to the downside. But if we scale a little bit deeper in here, right, we can see that this candle right here, unmitigated supply zone, because price broke cleanly through here, left a bunch of orders in here where people is trying to get out of their position and expecting price to come back into this unmitigated supply zone in here. Let me just do it like this, there. And you can see price tapped into this and then started to move to the downside, right? You can see this happening over and over again. You can, yeah, it's happening all over the charts, basically. So for example, just as an example from nothing, you can see this bearish candle right here, right? This is an unmitigated candle because you have a clean break to the upside. Where did price come back in and mitigate those orders? Right here. And what happens? You have this flood of orders to the upside right there because they cancel their orders and price fluctuates to the upside, right? So this happens everywhere, and it's a really good tactic to use in the market, especially if you're trading order flow. But let's head back into the fake out. So basically you can see that the market broke out of the high right here and then came back into this unmitigated supply zone and then started to move to the downside. So basically when it's coming in here, you can scale down to whatever time frame you want. You can wait for the 1 minute break. You could wait for confirmation to take this trade to the downside. You can use volume. You can use whatever technique you have to catch those trades to the downside. And then you target, if it's too close to the first zone, you could target the midpoint as your first zone and then your last as your second, right there. And then you could basically hold this for a while if you wanted to, though, right? So you also have some breakouts in here and a retest, for example, this right there with a retest and then a good bearish candle to the downside. That could be potentially a good trade as well, right? So it's all up to how you want to trade this. Let's look at the next example in here. We have some more examples for sure. So you can see here, right, we had a good bullish push to the upside in here. And then you can use your point of control to the downside, to the upside. Oh, let's do it like this. And then you basically can see where are most of the orders laying, or where did the most trading occurred, right? So it was around this zone right here. Meaning that all of these buyers right here would likely put their stop loss under this low or this low right here, right? So under these lows right there is basically where the orders are stacked up with stop losses and stuff like that, or unmitigated orders as well. And then we're basically looking for the first unmitigated zone under these lows in here, which would be this bearish candle with the wick on the next candle right here, and you can see that price broke this clean, did not come back into this, and there was a lot of orders stuck in here before price did go up. So price pushed down to this one, took out liquidity, and then started to move to the upside again. So this is basically how the fake out works. So let's look at the next one. This is a little nice technique for you to start using if you want to have another option than the orb, for example, or another technique you have to trading, basically. So you can see here the market is going down, 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 down. We don't have any specific up move here, so we could look for any point of control or where most of the trading occurred, right? But we can guess that alongside this range right here, we have a lot of orders stacked above here, right? But we also need to focus, because we're focusing on the first break right here as well. This is the first break of this range right here, and we can also look back. I know in fact that we have a surge of let's see here, this was basically this one was basically, okay, yeah, it was basically this push to the upside right here, right? We had this impulsive move to the upside, so this was actually just a retracement down to fill in an unmitigated demand zone in here to push price higher. So if I actually mark up the last demand zone in there, right? The last demand zone, which was unmitigated, that is this bearish candle right here with this wick. That's the last bearish candle. And you can see that price basically came back into that spot, mitigated it, and started to move to the upside again. So that's why the price actually moved. So it's really important to see what price is actually doing on a higher time frame as well, right? You want to see what price is always doing on a higher time frame. That's why trading sometimes doesn't make sense, right? So it's really important to know what the monthly, weekly, daily, 4 hour, 3 hour, whatever, all the time frames, all the bigger time frames is doing, because those time frames is usually the ones that's pushing the market to the direction price really wants to go, right? So we're just scalping here. So let's go to the next one right here, and you can see, what do we have? We have the first fake out right there. This is the first move, first fake out, right? We're expecting first fake out in here, and we're looking for the first demand zone to tap into in here, right? So you can see here, this is the last bearish candle. You can basically see that the last liquidity is resting under here, right? You're expecting price to come back into this liquidity zone, and then you're looking for price to come back and mitigate this zone right here. But I wouldn't use this one. Why? Because it's already been mitigated by this liquidity pool which you're looking at, right? So we would look for something under this low, right? The first unmitigated demand zone under this low right here is the first one we're looking for. So I would scale down maybe to the 3 minute. Oh, and now I've probably lost track on where I was, but I think it was basically here, right? So I can do the replay mode in here, and we can have a look, right? We can have a look in here. So the first unmitigated demand zone under these lows in here would be the 30-second chart in here. 30-second chart, this is the first unmitigated demand zone under this low in here. So this is the place I would look for price to go to the upside again, right? From this standpoint. So you can actually see the market started to move to the upside. It created what? This is the lowest point. This is the high that created this low. It broke to the upside, and then it started to move, right? It started to move here. So you can actually get in basically around here, right? And then price went again, created a new high, left a demand zone in here, right? Left a demand zone, unmitigated demand zone. You could expect maybe price to come back into this one to push price higher. Oh, yeah, perfect. Yeah, there we go, right? And then price goes to the upside in here. Hopefully to the top. I don't remember how it went though. Yeah, perfect to the top in there. So beautiful trades to the upside, a new strategy on Dow Jones. You can test this out for yourself. And if you have any questions, join our Discord, like and subscribe, and just fucking make it.